Everyone's saying that Bitcoin and Ethereum are finally calming down, but at the same time, regulators, banks, and institutions are quietly tightening the system. The contrast matter more than price today. Welcome back to Black Room Trade. In this playlist, we look at what's changing under the hood, regulations, infrastructures, and behavior. Today is one of those days where the surface looks quiet, but the system is moving. Let's start with the biggest pressure point today, regulations. The SEC lawsuit against Justin Sun didn't move forward quietly. According to BitGet News, House Democrats are now demanding the case be urgently resumed, citing political pressure. Now here's why this matters. Over the past year, a lot of high crypto enforcement cases slowed down, and some of them even became politically messy. That created a feeling that regulations might be easing or losing momentum. Now lawmakers are openly pushing the regulators to restart enforcement, not behind closed door, but in public. So when enforcement pressure resumes at the political level, it doesn't just affect one person or one protocol. It changes how exchanges, brokers, and institutions think about risk. So if regulators are back at the table, who's going to start pulling back first? Now, usually this kind of moment doesn't cause immediate market moves, but what it does is raise compliance's costs. It's going to slow experimentation and shift power towards regulated players who already have legal terms and licenses. Now that connects directly to what we saw next. Interactive Broker announced 24/7 USDT funding and plans to support Ripple RLUSD next. Now before this, crypto funding rails were mostly exchange-based and time-limited. Banks stayed cautious, but now a big old-school investment firm is using digital dollars as a reliable tool to move money 24/7, just like electricity or the internet. Now what's going to change behind this is that liquidity becomes more institutional, more regulated, and less chaotic, but also less forgiving for smaller players like us. Now let's talk about the part most people miss when the market feels calm. Derivative and behavior. Now the CME group is launching futures for Cardano, Chainlink, and Stellar. So before this, most altcoin exposure lives on crypto native exchanges, but now institutions can hedge and trade these assets inside regulated market. At the same time, Ethereum's data shows more people using the network for the first time. That's important because it tells us something subtle. Even though the narratives are pretty calm now, the participation is still growing. Meanwhile, Chainalysis reports that AI-enabled crypto scams now hit 17 billion in losses in 2025. Now this combination usually leads to one outcome: more user, more risk, but more pressure for oversight. And finally, zooming out to macro, yen rallied after Japan floated the idea of possible joint foreign exchange intervention with the US. Now that kind of language doesn't show up when things are calm. Before this, currency were mostly left to interest rate and market flow. But now, with the hint of intervention, that tells you policymakers are watching instability more closely. This isn't about Japan alone, it's about how sensitive the global system is right now. And when stress starts showing up at a currency level, investors usually begin asking a different question, not just what's going up, but where risk actually lives. So as you watch FX, rates, and policy headlines, it's worth asking yourself, when money itself becomes unstable, which asset starts getting monitored more closely and which ones don't? So when people say the market feels a little bit calmer now, I do agree on the surface, but underneath, regulations is tightening, institutions are still expanding quietly, and infrastructure is still becoming more controlled. But historically, this is how markets grow up, not in explosions, but in pressure. Alright, that's what I have for you guys today. If you feel like I missed anything, feel free to drop a comment. And if you found this video helpful, make sure you drop a like and subscribe. I'll see you in the next one.